The world of Snarf.
Hey guys, it's been a while since I've done a Dividend Digest video, so let's go ahead and dig in. So, speaking of digging in, today's stock pick is actually, in the food and beverage industry, and it is Coca-Cola. So that's a pretty well-known big household name if you're not Pepsi or Coca-Cola or vice versa. The reason I chose Coca-Cola is because I actually own it in my portfolio, and it's a pretty good dividend player. So let's go ahead and break it down and take a look. All right, so currently, as of today, Coca-Cola, their share price is $44.94 a share with a dividend yield of 3.13%, and they do pay quarterly. So every 3 months you can expect to get a dividend payment from Coca-Cola. That is why this is so appealing. It's a pretty well-known brand, very steady growth. They've been around a long time, 100 years or so. So, they haven't really gone anywhere. They've done nothing crazy but, pay out dividends and have that nice dividend growth. So, touching on their dividend growth, I went ahead and expanded this chart to 5 years here on M1 Finance. If we go back and look, back in 2014, they paid 31 cents per dividend. For each share, I should say, there's 31 cents dividend per share. They then increased it 33 cents, 35, 37, and guess what? 39. So does that mean the next one's going to be 41 cents per share? It's likely, which, that shows dividend growth, which is awesome. And then, of course, you take those dividends and you reinvest it back in. Pretty good performer here. So I guess we can just sort of break down. I'll read a little bit of their profile. They're the largest non-alcoholic beverage company in the world. $30 billion in annual revenue. They have Coca-Cola, Fanta, Sprite, Minute Maid, Powerade, Dasani water. So they're in a lot of different beverages. An interesting one here that I'm kind of excited to see what happens is the acquisition of Costa, which is expected to close in the first half of 2019, which is a large coffee company in the UK. So that could really boost Coca-Cola's earning powers and whatnot. So right now, I do own Coca-Cola. My average share price is $47. You can see that it's down a little bit from that. So I'm kind of watching to see how far down the price will actually drop below $45 a share, and I'll try and snag more up then, just to bring my average cost down on Coca-Cola. But let's dig into the what-if scenarios, which I know is what you guys really like to see. So let's go ahead and pull up the spreadsheet here. All right, so Coca-Cola, I went ahead and plugged in some numbers. So $44.94 for today's share price, 3.13% yield. That would be $1.41 per share each year, divided it by 4. So this is a little bit off just because they need to kind of declare their dividend. Mathematically, this shows that it's 35. So we'll run with that just for this what-if scenario. All right, so let's take a look. So here we go. Have it broke down for the first year. If you were to invest $1,000 into Coca-Cola shares, what would that look like? So here I have it being paid out 4 times throughout the year. I don't necessarily know if these are the correct months. I believe they are for Coca-Cola, but not every quarterly dividend payer pays on this same schedule. But I think Coca-Cola does, so this is a good representation. So initially, you have $1,000 at the current price. Excuse me, that would give you 22.25 shares. Third month, it'd pay out $7.83. You're going to reinvest that and buy some more shares. On the 6th month, that is now going to pay you $7.89. You're going to reinvest that. That is now going to give you $7.95. You're going to reinvest that, and then it's actually going to break $8 on the very last one for your total earnings that year of $31.67 in dividends. So that is just with the initial payment of $1,000. You're not adding more capital. You're just simply reinvesting dividends. Now, if you're to continue that for a second year, that would then grow. It'd actually grow a whole dollar more. So second year you would earn $32.67. So between the 2 years, you'd have over $60 made in dividends. Like I said, this is only if you initially invest $1,000 that first year and you don't ever touch it again. Now, is that realistic? Do we ever not add money back? No, so we will be adding money back into that and trying to grow that dividend yield. So this is actually on the lower side of dividend stocks that I've reviewed. However, it is pretty steady and they do have dividend growth, which is why I picked it. It's a pretty safe stock. I don't think magically one day it's going to just tank and I'm going to lose a lot. So that's something I plan on holding for a while. So what if, let's just say now this next year, you decide to put another $1,000 in. So now your dividends are looking close to being $16 per payout, so each quarter. So that's a lot more generous there. So close after 2 years, you're close to $100 back in dividends. So that's pretty nice. So $1,000 is about what I have in Coca-Cola in my M1 portfolio, along with a bunch of other holdings. So this is a nice little cushion there that I see drop in every 3 months. Other ones are like P&G. They fall in every quarter. So that's a good player that falls in. AT&T. So I picked a few different quarterly payers there just to sort of fall in together and get me some nice dividend payments. But Coca-Cola looks pretty solid. It's been here for a while and I don't think it's going anywhere anytime soon. So I just thought I would give you guys a nice little visual how this can pay out for you guys, let you kind of decide on your own. It's a household product. You see it a lot. It's been around for a long time, and again, I don't think it's going anywhere. So I'm not telling you this is the way to go. I'm just presenting the facts, the numbers, and letting you see what it looks like. So hopefully you guys liked that. Go ahead, comment below, let me know what other stocks you might like to see. I can run some of these simple little analysis in the future, but as always, appreciate you guys watching. Go ahead, like and subscribe, and I will catch you in the next one. Thanks, you guys.